S-Corp owners, the IRS just quietly changed something, and if you talk to your accountant only once a year, this could cost you. The IRS updated the CP-261. What's that? That's the letter you receive confirming that you are in the S-Corp election. Historically, it was just a confirmation letter. Now, the verbiage in the letter is telling you you have to have reasonable compensation. What is reasonable compensation? Historically, it was just a confirmation. If you're a shareholder employee providing services to your S-Corp, you must determine and pay yourself reasonable compensation. And here's the strong language. The IRS may recharacterize your distributions as wages if they believe you underpaid yourself. That means back payroll taxes, penalties, interest, increased audit risk. This is no longer passive language. This is enforcement language. What is reasonable compensation? Well, it's not the 60-40. It's not what your buddy does. It's not as low as possible. It is based on your duties, the hours that you work, the industry norms, geographical location, experience, court precedents, and most importantly, documentation. How many times have I said that to my clients? Did you document that? If you can't defend how you arrived at your number, you're exposed. Why does this matter more than ever? The IRS created a dedicated pass-through entity compliance group. They are tightening enforcements on S-Corps. And that CP-261 is now doubling as an early warning shot. The days of guessing are numbered. This is where tax maintenance changes everything. Every single one of my tax maintenance clients receives an annual reasonable compensation report. It's not a guess, not a rule of thumb, a documentation that supports the report. Why? Because reasonable compensation is not a file the return and hope for the best issue. This is a year-round planning conversation, and this is exactly why you should be speaking with your accountant more than just at tax time. And the only time you talk to your accountant is when the numbers are final. It's too late to plan. It's too late to adjust your payroll, and it's definitely too late to defend a strategy. Tax planning happens during the year. Tax preparation happens after the fact. There are two different services, and I don't do one-night stands with my clients. Yes, the IRS website still shows 2017 sample of the CP-261. Give them a second, they'll update it. You know it takes the IRS time. The language was updated in late 2025, and they just didn't update the sample date. Apparently, updating the letter wasn't enough heavier lifting for 1 year. If you are an S-Corp owner and you're guessing at your salary, you've never had it documented comp analysis, or you only speak to your accountant once a year, it's about time you change that. DM me maintenance. Let's move from your reactive compliance to a proactive protection, because reasonable compensation just isn't a number, it's a strategy.